Welcome back. You're watching The Money Show with me, Kavita Thapliyal, and there are plethora of funds available in the market and through which you can invest your hard-earned money. But how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We have on board Hemant, Rustagi, Wiseinvest Pvt.Ltd. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571. You can also email us your queries on themoneyshow@etnow.tv. Good evening, Hemant, and welcome to the show. We have first question for you from Mr. Damodar, and he says that he wants to achieve a corpus of 3 crores and his time of investment or time horizon is 15 to 20 years. He has certain funds in his portfolio, which is PGIM India Mid Cap Opportunity, ICICI Blue Nifty Next 50, SBI Small Cap. He wants to understand if he can hold on to these funds and how much would be the investment amount that needs to raise.
Good evening, Kavita. I think if you look at his corpus that he wants to build up, basically his current investment is around 10,000 per month through SIP. He needs to actually invest in all 31,000 rupees. So basically he needs to add his SIP of around 21,000 to what he is doing currently to accumulate the corpus that he intends to do after completion of his time horizon. There are 3 funds in his portfolio. There is one mid-cap fund, there is a small-cap fund, and there is basically a passive fund, index fund, which is Nifty Next 50. My advice would be that yes, it makes sense to have maybe a passive fund in the portfolio, but it would be better that to create the kind of balance that you require in the portfolio, that even if you're looking at large cap, it will be better that if you can look at Nifty 50 instead of Next 50. So I think one change for the current investment, but like I mentioned, he needs to increase his SIP by 21,000, and that he should try and do as soon as possible, because if it takes more time to do that, he will obviously have to increase his SIP amount over a period of time.
What about the fund selection?
Sorry, Kavita?
What about the fund selection?
Well, he already has 3 funds. One, like I said, one large cap, mid cap, small cap. He can add to that. It all depends on how much he wants to increase and whether he's going to do it immediately or after some time. But definitely he can increase. There is a scope to increase investment in the current 3 funds. If he needs to maybe add 1 or 2 more funds, then my recommendation would be to look at a large and mid cap fund. My 2 recommendations would be there. One is ICICI large and mid cap or HDFC large and mid cap. So one of those 2 funds that can be included in the portfolio.
Why do you think a large and a mid-cap category would be good for his portfolio? I mean, can he add like a flexi cap as well? Is it possible?
Yeah, he can. See, what happens is, if you look at a flexi cap, the fund manager has the flexibility to decide, how much would be allocated to each of the market segment. But invariably, what we have seen is, if you really analyze the portfolio of most of the flexi cap funds, you will find that there is a bias, a very strong bias, in fact, towards the large cap. So what typically happens is that maybe around 70-80% will go into large cap. So that's exactly the reason why I was saying that if you go into large and mid, then you know that at least 35% will be invested in each of these segments. There again, you will see the bias for the large cap, but it won't be not as much as what you usually will find in the flexi cap.
All right. Now, what happens is when we talk about diversification, and especially if you talk about having a large cap tilted portfolio, one definitely needs to keep in mind, if you have a specific large cap fund, if you have a flexi cap, and if you have a large and a mid cap. Do you think exposure in large cap, because large cap is a category where a fund manager cannot really experiment much, but instead of that, a mid cap and small cap, or even a flexi cap, you can have variations. You can have like a large cap tilted flexi cap, you can have a mid and small cap tilted flexi cap. So how can one play that strategy where they can have a restricted exposure to large cap, so that looking at the kind of performance, the entire portfolio doesn't have to suffer?
See, there are 2 things that one can look at. If you really are concerned about that you don't want your portfolio to be having a heavy bias towards the large cap, there is a category called multi-cap. Now, multi-cap means there is a minimum investment that has to be made in all the 3 segments, which is like say 25%. Now, what happens there is that even though you may find that even in the multi-cap, the exposure to a large cap would be more than the rest of the other 2 segments, but it won't be that much higher as you would find in a flexi cap fund. Second is, like I mentioned again, there is a possibility, of course, you can create a portfolio by looking at large cap, mid cap, and small cap and invest separately in these. But then what happens is rebalancing becomes a problem. As an investor, you'll not know really when to kind of rebalance, or even taxation can be an issue. So that's the reason why I usually recommend that you look at large and mid cap. Because in those kind of fund, you see maybe 60% will be in large cap and 40% will be in mid cap. So you can maybe still have the bias towards the large cap, but it won't be, like I said earlier, as high as you would usually find in a flexi cap.
All right, we move on to our next viewer, Lakshmi Menon from Bangalore. She's on phone line with us. Hi, good evening, ma'am. How are you doing?
Good.
Thank you so much for sending us your portfolio. So, just cross-checking your funds, you will be, you want to save up for your retirement for next 15 years, and currently you have Parag Parikh Flexi Cap, PGIM India Flexi Cap, ICICI Pru Nasdaq 100, PGIM Mid Cap Opportunity, Quant Mid Cap, Nippon Small Cap, and Quant Small Cap. Are you consulting a financial planner?
I'm the financial planner, but right now my husband is not there. After that, he will come. You can call.
All right. So maybe he can watch our show again in the night, when we have a retelecast. But then, Hemant, what do you have to think about the strategy? Also, I'm not sure about the corpus, which is not mentioned how much they would be wanting to accumulate for retirement goal. But then, how are the funds? Too much of repetition and over diversification in certain categories?
Well, I think two important aspects here. Looking at the time horizon, it is absolutely important to build a portfolio which has the potential to kind of keep you stay ahead of inflation, which is what I think the equity portfolio will do. I think in that sense, she has done well. She's built a portfolio of equity funds. There are a couple of changes I think that would be required. One, my recommendation would be that there is a PGIM Flexi Cap fund. We just discussed that. My recommendation again would be that instead of that, go for a large and mid cap fund. I mentioned about two funds earlier, ICICI large and mid cap fund or HDFC large and mid cap fund. One of the funds can be looked at. Then I see that there are two mid cap and two small cap funds. The issue is with the small cap, there are no, because if you really see in the small cap, the most important thing is the quality of the portfolio and how aggressive the portfolio is. Normally, you will see when you analyze the portfolio of small cap funds, you'll find a number of stocks exactly for this reason, because there are issues of liquidity, and obviously you want diversification level to be higher as compared to other category of fund. But I would recommend that maybe look at one small cap fund here instead of two. So there is Nippon and there is Quant. Maybe she can continue with Nippon, and the money which is being invested in Quant can also be added to this. So in terms of segment exposure, it should be around 20% of the overall investment. That is fine, but keep one fund in that category. And second, as I mentioned, instead of the flexi cap fund, go in for a large and mid cap.
Thank you so much, Lakshmi, for the question. And you will be getting, just in case you want to know the timings, 10 p.m. tonight again you can watch the show, or else this show goes on our channel's YouTube also. Maybe you can get the fund's name and suggestion made by Hemant over there. We move on. Let's take Sunny Chadda's question, Hemant. And so he is doing SIPs in UTI Nifty Index Fund, UTI Nifty Next 50, Sundaram Large and Mid Cap. He also has Kotak Emerging Equity, Axis Small Cap, Motilal Oswal Nasdaq 100, DSP Healthcare Fund. And he wants to keep up with these SIPs for more 5 to 7 years. And he wants you to review his funds, and also if he needs to switch or rebalance his portfolio towards any specific category. So, yeah. A lot of repetition and a sector fund.
Yes, Kavita, I think two important aspects here. One is that portfolio has a mix of active as well as passive funds, which I think is a good strategy. It's always, if you are looking at indexing a part of your portfolio, you can do that. Now, the issue here is that there are two index funds I can see. One is the Nifty 50 and the second one is the Nifty Next 50. And in both, the amount invested is equal, which is 9,000, I think, in both these funds. The issue is that while I totally agree that you can index a part of your portfolio, but you need to be very selective in terms of which funds are you investing in. Now, when you are investing equal amount in both these funds, which practically means that you are actually investing in every single stock that is a part of the large cap universe, which I don't think is a great strategy. So for him, my recommendation would be that he can continue investing in the Nifty 50 fund, but in place of Next 50, UTI Next 50, I would recommend having an actively managed large cap fund, which is Nippon India Large Cap Fund. If you really look at how this fund has performed consistently, it has outperformed the index, it has outperformed the peer group. I think it's a very good addition in the portfolio. So I think one change would be that. Second is in the large and mid cap universe, there are better funds than Sundaram. Two funds I've already discussed in the show. I think one of those funds I think would be definitely a better option. Third is you having a healthcare fund. It's sometimes you get tempted to include a sector fund, thinking that if I make my portfolio slightly more aggressive, I can get higher return. But there are issues of how you manage that part of your portfolio. You need to be very sure about your timing, when to enter, when to exit. So for anyone who doesn't have a big, large portfolio, who's not very experienced, doesn't have the wherewithal to know what is the entry and exit point, my recommendation always is to go for diversified fund. One fund that we are making change here in terms of large and mid, I think there is a scope to increase allocation to that. So the money which is being invested in the DSP healthcare fund, that can be added to the large and mid cap fund. So a couple of changes in the portfolio, important because he has another 5 to 7 years. So he doesn't really have a very long-term horizon from here on. So he need to really create the right balance where the exposure to different market segments is in such a way that there are no unmonitored risk in the portfolio.
All right, so that's the recommendation coming for Sunny Chadda. We don't have him on the phone line, or else we could have dived deeper in his question. But then let's move on. And let's take Azruddin from Qatar, his question, and he's invested in UTI Nifty 50 Index, SBI Contra Fund, Mira Asset Tax Saver, Parag Parikh Flexi Cap, Quant Mid Cap, PGIM India Mid Cap, and Quant Small Cap, Canara Bank Small Cap, Tata Small Cap, and his corpus is 2 crore plus. He'll be investing for 15 to 20 years more for children education and marriage, and he also, his plans are all direct plans, that's what he writes, and he wants an investment strategy or a portfolio where he can beat inflation in the long term, and which is why specifically he says that he's picked up small cap funds, and he can do more SIPs of 20,000, 27,000 per month, and he has just started investing in March 23. So a lot of exposure in small cap, is that really helpful, or is just making your portfolio more risky?
Well, Kavita, let me address that issue. He mentioned that his intention is to stay ahead of inflation or beat inflation. Obviously, look, when you're investing in a portfolio of equity funds over the next 15, 20 years, you will definitely beat inflation. You don't have to really make your portfolio so aggressive to beat inflation. So I think there is a need for him to make a change in his strategy there. If you see in the current investment out of 20,500, almost 13,500 is being invested in small cap fund. Yes, these funds do have the potential to perform better than the other segments for the longer term. But then one need to really understand that there has to be always a balance between risk and reward. It can make portfolio very, very aggressive. So my recommendation would be that he should be looking at only one small cap fund, which is Canara Bank Small Cap Fund. And the money which is being invested in the remaining two small cap fund can be actually reallocated to some of the existing fund. For example, there is a Parag Parikh Flexi Cap Fund. This fund obviously predominantly invests in large cap, that there is some exposure to mid cap, and then there is also exposure to US stocks around 17%. I think that increasing allocation to that. Second, there is also index fund, UTI Nifty 50 index fund. So 4,500 can be added to that. So like I mentioned earlier, if you are trying to create a portfolio mix of, actively managed fund and the passively managed fund, then the allocation has to be right. So I think this is the changes that he needs to make in his portfolio.
All right. Now, looking at the incremental amount, he should be investing in the same funds?
Well, I think he's right. Currently investing around 20,500. He mentioned that he can overall invest around 27,000. I'm not too sure whether he wants to add 27,000. So there is remaining 77,000 that he needs to add. He can definitely look at existing funds to add this amount. All
right, we move on, and Let's take G. Rameshwar Reddy's question. He is 72 years old and he holds 45,000 in HDFC World Index International Fund for at least 2 years and 4.5 lakh investments so far, and he's not happy with the returns. So what do you suggest? What kind of a fund is this first? What kind of a fund is this?
Well, yes, I think this is a fund. Basically, it's HDFC World Index International Fund that is mentioning. His actual name is HDFC Developed World Index, which is actually a fund of fund and it invests in index and the ETF that correspond to MSCI World Index. So practically, if you look at the composition of this portfolio right now, around 66% of the money is invested in the US market, around 19% is invested in European markets, and the remaining in the rest of the markets. So, you can see that it's a good spread in terms of allocation to different international markets. I strongly believe that there is always a very strong case to have at least one fund where you have exposure to international markets, because geographical diversification in the portfolio is absolutely important. Most of the time, we focus on having different asset classes in the domestic market, and of course, within that, equity, for example, we look at different exposure to different segments in the market. But I think having exposure to international market, I think, is important. But it's very important also to see the quantum of exposure. If you're a new investor, don't very aggressively invest in these funds. Maybe you can begin with 5%, go up to 10%. But I think it's important to have this. Now, he said he's not very happy with the performance. Look, this is not a very old fund. I think it's around 18 months old fund. And we have seen in the last 12 to 15 months how all the markets have been impacted for various reasons. So obviously, if those markets have been volatile, the returns have not been that good, that will also reflect in the performance of this fund itself. But I believe that it's a good fund. He needs to really give it time. He should not be judging this fund based on the performance of the last 1 year or 15 months.
All right. We don't have him on the phone line, otherwise we could have asked about his rest of his portfolio. Looking at his age, which is 72, we would really want to see how he's planned his retirement. But let's move on and let's take Gopi Raju's question. He's from Chennai and he's been doing SIPs in almost 7 mutual funds since 2018, ICICI Large and Mid Cap Fund. L&T Mid Cap Fund, he has Sundaram Consumption Fund, whereas at Large Cap he also has ICICI Pru Banking and FinServ Fund. He has Axis Blue Chip and Aditya Birla Digital India Fund, and he wants you to review his portfolio. A lot of sector allocation, don't you think so?
Yes, there is. There's a consumption fund, but I think he has discontinued that. There's a digital fund. We mentioned this issue earlier in the show that for any investor who is not really very experienced, there is no need to actually look at sector fund. Let's not forget that if there is a sector that has a potential and if the fund that you're invested in has been consistently performing better than the average of what of the category gives, which means that the exposure to sector also has been well taken care of, which means that if there is potential in a certain sector during a certain phase, the fund manager will ensure that your fund has a reasonable exposure to that. You don't really have to kind of go into a sector fund yourself. I think that's important for every mutual fund investor to understand that when you give money to a professional fund manager, you allow him to take decision or her to take decision on your behalf. Many a times we try to replicate what the fund manager is doing. I think that it defeats the very purpose of handing over your money to a professional fund. So my advice always is that to stay away from sector fund unless you are a hardcore equity investor, you are a very experienced investor, you are comfortable, you know exactly when to enter or when to exit, and you are okay with a higher level of risk in the portfolio, then you can look at it. But I think for a common investor, I don't think it really makes a lot of sense to look at a sector fund. So I think definitely there is a need to kind of make a couple of changes in the portfolio. As I mentioned earlier in the show, that to create the balance between risk and reward.
All right. Now, even if one wants to diversify their portfolio by adding a sector fund, what should be the criteria? Looking at the current scenario, what sector do you think really makes sense to have in your portfolio?
Well, I think one sector that definitely I feel that has the potential to do well, has started doing well, has been doing well, in fact, is the banking sector. But the issue is again that if you analyze the portfolio of any flexi cap fund or any large cap fund, you will find that around 30-35% exposure already to this sector, which again is an important aspect for investors to look at. IT as a sector has been doing very well, hasn't done well, and maybe it will take some more time to perform well from here. Again, even in terms of pharma, if you see, there was a time, couple of years, the pharma fund did very well, but in the last year or so, they have not done as well. The point is that there can be certain sector, for example, in between we saw that in the thematic fund, the infrastructure funds did very well. That's exactly the point I was trying to make, is that the timing has to be right and the selection has to be right. And whenever you want to look at a sector fund, I think it's important to analyze your overall portfolio and see what is the exposure.
Right. I think that will be all for today. We are running out of time, but Hemant, thank you so much for being on the show and helping our viewers with their financial portfolios. And on that note, I sign off with leaving you with our WhatsApp number and email ID where you can reach us with your financial portfolio queries. Thank you so much for watching. Goodbye.